Of course, I'm talking about a recession. Do you think it is likely that the United States will dip into a recession because of President Trump's tariffs?
I think that right now we are at a decision-making point and very close to a recession. And I'm worried about something worse than a recession if this isn't handled well.
The man who predicted the 2008 financial crisis built the world's largest hedge fund and has studied economic cycles for over 50 years, just issued his most terrifying warning yet. Ray Dalio says we're facing a crash worse than 1929, and he's not talking about next year or maybe sometime in the future. He's talking about right now. While everyone else is debating inflation rates and Fed meetings, Dalio is preparing for something far more catastrophic: the end of a debt cycle that only happens once in a lifetime.
I'm Ray Dalio, and after 50 years of studying markets and building the world's largest hedge fund, I need to tell you something that's going to be hard to hear. We are heading into an economic collapse that will make 2008 look like a minor correction, and most people have absolutely no idea what's coming. I've been studying debt cycles for 5 decades, and what I'm seeing right now is a mirror image of 1929. The same patterns that led to the Great Depression are playing out again, but this time the stakes are infinitely higher because our debt levels are beyond anything the world has ever seen. If you're serious about protecting yourself and your family from what I believe is inevitable, you need to listen to every word I'm about to say. I didn't build Bridgewater into a $150 billion fund by being wrong about these cycles. I've seen this movie before, and I know how it ends. The question is, will you be prepared when it happens, or will you be another casualty? Stay with me. Your financial survival may depend on it. Let me be completely direct with you. I didn't spend the last 5 decades studying economic history to scare people. I did it to understand patterns, and right now, every pattern I've studied is screaming danger. We are in the late stage of a long-term debt cycle, something that only happens once or twice in a human lifetime. I've studied these cycles going back 500 years across every major economy and empire. What we're experiencing isn't a normal recession that can be fixed with rate cuts or stimulus spending. This is structural. This is the end of an era. And most people alive today have never experienced anything like what's coming because it hasn't happened since 1929. The forces that built this cycle have been compounding for 40 years, and now we've reached the point where they can no longer be managed by conventional means. When I tell you this is different, I mean it's fundamentally different. How we got here, the 40-year debt binge. For 4 decades, I've watched as policymakers made the same mistake over and over again. Every time the economy slowed, their response was identical: lower interest rates and encourage more borrowing. It worked for a while, maybe too well. In 1980, when I was just starting to build my understanding of these cycles, total U.S. debt was $4 trillion. Today, it's over $95 trillion. That's not economic growth. That's a 40-year borrowing binge that has finally reached its limit. Here's what I learned from studying debt cycles. You can pull demand forward from the future for a very long time, but eventually you run out of future to borrow from. We've reached that point. Interest rates hit zero after 2008 and essentially stayed there for over a decade. But now they're rising. And here's the problem that keeps me up at night. We can't afford to service our existing debt at higher rates. We've created a debt trap with no easy way out. The deleveraging process I've seen before. I want to explain something to you that most economists either don't understand or refuse to acknowledge. When debt reaches the levels we're seeing today, the unwinding process follows a predictable but devastating pattern. It starts quietly. A few missed payments, some credit downgrades, nothing that makes headlines. But in a highly leveraged system, small problems cascade into massive ones through what I call the deleveraging spiral. Here's how it works. As credit tightens, spending falls. As spending falls, incomes drop. With lower incomes, debt becomes impossible to service, which triggers defaults and forced asset sales. As assets are sold, prices fall, collateral values disappear, and lending freezes up completely. I watched this exact process unfold in 2008, but that was just a preview. The debt levels today make 2008 look manageable. And unlike 2008, we no longer have the policy tools to fight back effectively. Why traditional tools no longer work. This is the part that even many of my peers in the financial world don't fully grasp. We've reached the point where the tools that built this system are now destroying it. When I started in this business, central banks had plenty of room to cut interest rates during downturns. Today, rates are still near historic lows, but inflation is forcing them higher. The Federal Reserve is trapped between two disasters. Let inflation run wild or trigger a debt deflation spiral. Government deficits have exploded to levels I never thought I'd see in peacetime. In my early career, a $100 billion deficit was considered dangerous. Now we're running trillion-dollar deficits as far as the eye can see. Central bank balance sheets have grown by over $20 trillion globally since 2008. When I explain this to people, I tell them to imagine the Federal Reserve buying up the entire stock market. That's the scale of intervention we're talking about. The problem is these interventions are no longer working. When you cut rates to zero and markets still fall, when you print trillions and the economy still struggles, when massive government spending creates more problems than it solves, that's when you know the system is broken. The cascade I see coming. Based on my study of historical debt cycles, I can tell you exactly how this collapse will unfold. It won't happen all at once. It will cascade through the system in waves, each one bigger than the last. The trigger could be anything: a major bank failure, a sovereign debt crisis, a geopolitical shock. But once it starts, the mechanism is always the same. Forced selling begins, not because people want to sell, but because they have to. Margin calls, redemption notices, regulatory requirements, all of these create simultaneous selling pressure that overwhelms any natural buying interest. I saw this in 2008 when even the safest assets couldn't find buyers. Next time will be worse because the leverage is higher and the policy options are more limited. When trust disappears, and it will disappear quickly, liquidity vanishes overnight. Banks stop lending not just to weak borrowers, but to each other. Credit markets freeze. Asset prices fall, not because of fundamentals, but because of reflexive selling pressure. The geopolitical dimension. What makes this cycle particularly dangerous is that it's happening at the same time as a major shift in global power dynamics. I've studied the rise and fall of empires for decades, and the pattern is always the same. Internal economic pressure combined with external challenges creates systemic breakdown. Internally, we're seeing unprecedented wealth gaps, loss of faith in institutions, and political polarization. These aren't just American problems. They're happening across the developed world. Externally, we're witnessing the most significant challenge to American global dominance since World War II. The relationship between the U.S. and China has shifted from cooperation to competition to outright conflict in key areas. When I look at history, I see that these internal and external pressures don't exist in isolation. They feed off each other. Economic weakness leads to political instability, which leads to international conflict, which exacerbates economic problems. It's a vicious cycle that has played out many times before. My personal preparation strategy. People often ask me how I'm positioning myself and my family for what's coming. The answer is simple. I'm not trying to predict exactly what will happen because that's impossible. Instead, I'm preparing for multiple scenarios. I call this building an all-weather portfolio, investments that can perform across different economic environments, not just inflation or deflation, but currency crises, geopolitical conflicts, and social upheaval. This means diversifying across asset classes, currencies, and geographies. It means holding some cash, some gold, some real estate, some stocks, but not being concentrated in any single bet. When systemic risk is this high, survival comes before optimization. I'm also diversifying politically and geographically. I have investments and interests in multiple countries with different political systems and economic structures. When one system is under stress, others may be more stable. The historical precedent that guides me. I want to share something with you that most people don't understand about historical cycles. The transition from one world order to another is never smooth. I've studied the decline of the Dutch Empire, the British Empire, and many others. The pattern is always the same. First comes economic overextension, spending beyond your means for decades. Then internal divisions weaken governance and social cohesion. External challenges arise from rising powers. Finally, the old order either adapts through radical reform or collapses entirely. The United States has been the dominant global power for over 70 years. That's an incredibly long run in historical terms, but it's not permanent. The economic, social, and geopolitical conditions that sustained American dominance are all changing simultaneously. This doesn't mean the end of America, but it does mean the end of the world order we've known since World War II. And these transitions are always marked by conflict, uncertainty, and economic disruption. What I believe happens next, based on everything I've learned about debt cycles and power transitions, here's what I think is most likely to unfold over the next 5 to 10 years. We'll see a major deleveraging event, possibly triggered by a financial crisis, possibly by a geopolitical shock. Debt levels will be forced down through some combination of defaults, restructuring, and inflation. Traditional monetary and fiscal policies will prove inadequate, leading to more radical interventions. Helicopter money, debt monetization, possibly even debt jubilees. Political systems will be strained to the breaking point as populations demand solutions that may not exist. This could lead to significant political change, including the rise of more populist or authoritarian movements. Internationally, we'll see the emergence of competing economic blocs, the weaponization of currencies and trade, and possibly military conflicts as the old order gives way to the new. I'm not telling you this to cause panic. I'm telling you this because I believe in the power of education and preparation. When you understand how these cycles work, you can position yourself to not just survive, but potentially thrive during the transition. The biggest mistake you can make is to assume that the future will resemble the recent past. The conditions that created the prosperity of the last 40 years, falling interest rates, expanding credit, American global dominance, are all reversing. That doesn't mean the end of the world, but it does mean the end of an era. And if you're going to navigate what comes next successfully, you need to start thinking and planning differently right now. Here's what I recommend you do immediately. First, educate yourself about how debt cycles work. Read my book, Principles for Dealing with the Changing World Order. Understand the historical patterns that are playing out right now. Second, build resilience into your financial life. Diversify across assets, currencies, and geographies. Reduce your exposure to debt and increase your flexibility. Third, prepare for a world that operates by different rules. The assumptions about growth, inflation, and stability that guided decisions for decades no longer apply. Fourth, stay informed, but don't panic. These cycles take time to play out, and understanding the process gives you a significant advantage over those who are caught off guard. I've spent my entire career studying markets and building systems to navigate uncertainty. What I'm seeing now represents the biggest challenge and potentially the biggest opportunity of our lifetimes. The transition we're entering will be difficult, but it's not the end of the world. Those who prepare intelligently, who understand the forces at work, and who position themselves appropriately will not just survive. They'll be positioned to build wealth during the restructuring that follows. The choice is yours. You can ignore these warnings and hope for the best, or you can face reality and prepare for what's actually coming. I know which choice I've made. If what I've shared resonates with you, I encourage you to dig deeper into these concepts and start taking action now. The window for preparation is still open, but it won't remain that way forever. The cycles are turning. The question is, will you be ready when they complete their turn?